Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a document so exciting, it's like finding extra fries at the bottom of your bag, but instead of fries, it's financial details. We are going to check a recent report from Nucor Corporation. Buckle up, it's time to decode what's really going on. Nucor Corporation just filed what's called an 8K report. This is basically a company's way of shouting, hey, something important happened to the Securities and Exchange Commission, the SEC. In this case, it involves a big change to their borrowing power. The big news is that Nucor entered into what they call the fifth amended and restated multi-year revolving credit agreement. That's a mouthful, but simply put, it's a fancy loan agreement. This agreement allows them to borrow money when they need it. Think of it as a souped up credit card for the company. Here's the juicy part. They increased their borrowing capacity from $1.75 billion to $225 billion. That's a significant jump. And they extended the maturity date. That means when they need to pay it back to March of 2030. So why did they do this? Well, increasing their borrowing power gives them more flexibility. It's like having more cash on hand to invest in new projects, expand their operations, or handle unexpected expenses. Extending the maturity date gives them more time to repay the money, providing financial breathing room. They'd filed the full agreement as an exhibit. That means the details of this agreement are available for anyone to see. This section just says that information from the previous section about the loan agreement is included here as well. This part lists the documents attached to the report. In this case, it includes the full text of the amended credit agreement, so anyone can take a look at the exact details of the deal. Now, let's step back and consider the big picture. Nucor is a major player in the steel industry. Taking on more borrowing capacity is a bold move. It could signal that they see growth opportunities ahead. Maybe they're planning to acquire other companies, invest in new technologies, or expand their production capacity. However, it also comes with risks. More debt means more interest payments and increased financial pressure. If the economy takes a downturn or the steel market weakens, Nucor could find itself struggling to repay its debts. Looking at Nucor's overall direction, this move suggests they're betting on future growth. They clearly believe that the potential rewards outweigh the risks of taking on more debt. It's a calculated gamble and only time will tell if it pays off. One potential risk is that interest rates could rise, making their debt more expensive to manage. Another is that demand for steel could decline, impacting their revenue and ability to repay their loans. In conclusion, Nucor's decision to increase its borrowing capacity is a significant development. It reflects their confidence in the future and their willingness to take risks to achieve growth. However, it also comes with potential challenges that they'll need to manage carefully. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoding. Let me know in the comments what company we should review next.